Long story short, Trump's agenda is very bullish for all commodities. It's also inflationary, which is great for monetary metals, which, yes, dear silver bulls, includes silver.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and I'm very excited today because someone that we have not had on the show in, gee, it's been a couple of years, although Lobo Tiggre of the Independent Speculator, who is joining me here today. And I know he has his nickname of Darth Silver, although I think there's a lot of value in hearing an objective counter to just silver's going to explode, silver's going to explode, silver's going to explode. And Lobo, I think your track record has panned out quite well on that. I love your column that you put out each week. I know you have you're a great resource for the resource stocks, not just gold, silver, but anyway, quite a lot happening in the world. It's a pleasure to catch up with you and see you again here today. And before we get started, how are you, sir?
Well, I'm doing well. I'm surviving from a recent back injury, and I'm just supposed to say fine, but I gotta say I got a flood of support from the audiences that I shouldn't have mentioned it to, but I'm better now. Okay, I my little sister's a PA, and she took care of me, and I'm all set. So life is looking good right now. Like they say, happiness is when you stop hitting yourself on the head with a hammer, which could be a lesson for silver bulls, by the way. But I'm feeling good right now.
Well, I'm glad to hear that. Yeah, I did hear in your column you mentioned you injured yourself sitting down. So,
Yes, I'm standing for this interview.
okay, well, I'm glad to hear you're taking care of yourself and feeling better. And yeah, certainly plenty to dig into on a variety of these metals. Although, just to get started, we're recording here on Tuesday, the 29th. We have gold at 33.83 and silver at 38.35. This is one day prior to the Fed meeting. Lobo, I think we will probably not have this posted until the day after the Fed meeting. So if you want to take any stab and prediction at what they're going to do beforehand, you're welcome to, but also just
All right, let me see. Let me see. No, I don't think we need to go too far down that rabbit hole. I'll be very surprised, like everybody else, if the Fed does anything surprising. By definition, I mean, just today, as we're recording, we got the JOLTS report, which showed not just a decrease, but a significant fall in both job openings and quits. Not record. It's not some, this is it, smoking gun kind of event, but it's significant. The JOLTS report is lagging, and it's starting to show some of the data that we're seeing elsewhere in the labor market. So I can see where some people might say, oh, well, gee, this could give the Fed, some reason to cut. There's only three more meetings left in a year, and they still have that dot plot telling them they got to cut and all this stuff. But I think it would be such a rug pull right now for them to shock the market with a rate cut or really a hike, which is probably what they should be doing. Uh, I don't think they're going to do that. Maybe the most interesting part, as usual, will be Powell's press conference as opposed to the decision. I'm with the market odds on this, and we'll see if I'm right or the market is right. But what Powell says, and whether I always wonder. We just saw Trump hand Powell that piece of paper in his tour in the Fed. It was like Abbott and Costello or something. He hands him the paper. You can see Powell going, you know, and I'm wondering if on that paper, instead of the cost estimate for the Fed, it actually said loosen or else, or something. Maybe we'll get a surprise by the time the audience is watching this. But here's the more valuable takeaway, Chris. I really think the Fed has become a sideshow. It's all about Trump shock these days. And I'm not saying that as an anti-Trump thing. I mean, even if you're 100% on board with Trump rebuilding Fortress America and reindustrializing America and bringing our defense industries back and all this stuff, fine. That still is a big change, and that's going to cause turmoil, and that shock has an economic consequence. And you can see it when, the kinds of things that would make Fed whisperers chase gold, silver, and other things in the markets, crazy swings because the Fed might do this or the Fed might do that. That's like a nothing burger these days. But just Trump suggesting, scratching his head, oh, maybe we'll do this, and boom, the market goes up or down like crazy. So Trump shock has pushed Fed shock out of the scene right now, if you will. And so I'm just not too worried about it, absent some really crazy, event, which I don't think is reasonable to expect. Long story short, Trump's agenda is very bullish for all commodities. It's also inflationary, which is great for monetary metals, which, yes, dear silver bulls, includes silver.
Yeah, and we will get to that in a second. Although I was giggling as you're mentioning the meeting. I mean, I wonder if you gave him the Godfather offer to lower interest rates. Well, the like you
But the
point
body
to.
language was precious. Like Trump's talking and Powell's going, and then he hands him the paper. Sorry, it was very fun. Maybe I'm just easily amused, but I thought that was one of the funniest things I've seen on, online for a long time.
Well, I think that's a great approach because, like you said, not letting the entire world revolve around it. Because whether it's Powell or obviously Trump's picking the successor, so we can see which way this is headed. Although Lobo, back to the gold and silver. Obviously, we're about 18 months into the rally, which started a month earlier in gold than in silver. And since again, I really appreciate the way that you look at silver and you point out the different forces that are balanced together. Any thoughts on why silver finally started moving in February of 2024 as opposed to any other time? I mean, we hear about the deficit. That wasn't new back then. Any thoughts on why then specifically?
Yeah, it's funny you point that out. Like people would write in and say, "Oh, this is it." The de-dollarization trend is at the point. Silver's really taking off. Well, if that was true, why wouldn't gold be taking off at the same time? Or if that was true, why were platinum and palladium and even rhodium taking off at the same time as silver? So, gold moved months ago, silver just last month. I don't see that as evidence of this being a monetary phenomenon. It's not about de-dollarization, dollarization, bricks, whatever. I think the evidence suggests that this is something industrial. And, this is where people, start calling me Darth and other things, because silver, yes, I get it. Silver is the word for money in many languages. I speak Spanish, I know, but French too. But I think it's undeniable. It's simply sticking your head in the sand to ignore the fact that silver's industrial side is increasingly important. And yes, it impacts the price of silver on the market. And we saw various expensive silvery metals moving at the same time. Now, what was puzzling, like if it was just that, it would be one thing. But what was puzzling about it is that the industrial use case, though, for silver and platinum is quite different. Platinum and palladium, okay, they're pretty close. Rhodium as well. They go in catalytic converters. Silver goes in solar panels. So why would silver move at the same time as these automotive metals? Okay, there's some silver in cars, and I understand that hybrids use a lot more silver and so, but it's not the same thing. So I thought it was interesting, and my take actually right now, and this could change based on new data, but the latest move was actually downwards in the other silvery metals and upwards to sideways in silver. Like silver outperformed platinum, palladium, rhodium this last week. So I'm thinking that it might actually just be one of those times where it was a coincidence that silver moved at the other time as these, like the others moving together made sense. And it just so happened that something else moved silver at the same time. I don't know what that is. I don't have secret sources in the CIA, right? I don't have an actual working Palantir to see what's going on in Mordor. But I did notice that the Japanese build out of solar installations went through the roof. Now it had started before, and I had thought that was the Chinese. I thought that was the Chinese saying, "Oh, we can't sell these solar panels in the US, so we'll install them ourselves." But it's continued even with the detente, and as you and I speak, they've just kicked the can down the road again, right? So it seems like the deal right now is the pre-deal with the US and China. Um, but the Chinese solar install keeps going through the roof. So if there's actually been a policy decision in Beijing and they're really ramping that up, that's going to consume a lot of silver. And if that happened at the same time as, the sort of sigh of relief in the markets about, the tariffs in general, put a tailwind on the automotive case, then it could have been a coincidence. But I'm just saying this because the industrial side, it seemed like it was the industrial and not the monetary side that made silver go up to 39. But the use case in actual industry is so different from the other metals. So I don't know the answer. This is one possible explanation. The takeaway from this, Chris, is, and I'm going to get rotten tomatoes thrown at me, but I think it is dangerous to assume that the next big move from here, 38, 39 is, oh, it's off to 50 and off to the races. If it's the industrial sign that took silver to 39 and Trump shock ongoing still needs to work its way through the real economy, that could be near term bearish for silver. And if that happens, dear silver bulls who've gotten your catapults with rotten tomatoes aimed at me, I would be buying. Right? I'm not making a bear case for silver. I'm just saying its industrial side seems to be what moved it recently. There is reason for concern about that in the nearest term. And if so, I wouldn't see that as a bad thing. I'd see that as a fantastic buying opportunity because ultimately, going forward, silver benefits from its industrial use case and from the monetary case. It benefits from the money printing and the inflation side as money, and it benefits as a commodity from the explosive growth of Trump's building out Fortress America, Europe remilitarizing, Russians and the Chinese not wanting to be left behind. I just think, as much as people get mad at me for warning that 39 doesn't mean 59 is next, I think that silver is the win-win metal here. Silver benefits from these tailwinds on the industrial side that gold doesn't. And I think both of those are in the future.
Yeah, it's a great point because we've seen a very different profile of the segments of buyers and seller in silver versus gold. And I think we can confirm what you're saying in that it was driven more industrially than from monetary demand because the big theme in the retail level for the last probably 2 years now has been a lot of selling on the retail level. So and 2 years ago, US retail was half of silver investment demand. So if the biggest customer is selling there, it's the opposite of what we've had in gold where central banks are buying. So I would agree with what you're saying that that's been on silver driven industrially. And yet at the same time, a lot of silver, we don't know how much, has come out of the public holdings. This would be a great question. I'm glad you're here to answer because based on, again, we don't know exactly what demand's going to be going forward, but based on what you're seeing now and also what you're seeing on the silver mining side, what is your take on whether this is, at least if the numbers we're seeing about deficits are even anywhere close to accurate, it's like, all right, you don't want to say, well, we're definitely hitting a shortage because, there's things can happen, but curious how you see that playing out over the longer term.
Right. Okay. Well, let me quickly say on the short term, because silver gets consumed, right? Unlike gold, which mostly, we dig it out of one hole in the ground and store it purified another hole in the ground, like silver gets used up. So the amount of silver stocks available for its many industrial and medical and other uses are limited. And if there is a disruption of supply, those stocks can get cleaned out quickly and you can see a silver squeeze. That is a real thing. It does happen in the real world. But it tends to be self-regulating because people tend to dishoard. It's one of those things where your audience and mine, we see a sale on silver, we just stack more. But the average person out there, they see, silver surge and they're like, oh, well, grandma's old tea set isn't doing us any good. And we got to polish that darn thing all the time. It gets tarnished, right? So let's just sell it, right? So there's frequently a spike in silver is met with selling, but that's short term. The long term, and I'm not sure if anybody else, I haven't heard anybody else really articulating this, but in my view, the long-term bull case for silver isn't just the monetary thing. Again, it benefits from its industrial side. Its industrial side is a positive in my view, not a negative. And here's the thing, most silver is a byproduct. Like we all know that if we know about the mining, there's no such thing as a pure silver mine. Even super high grade like Ishikari in Japan, that's actually a lead mine. It's galena with, gobs and gobs of silver in it, but it's by volume, it's a lead mine. And okay, the lead doesn't matter to something that high grade, but for most mines, the base metal the silver is in matters a lot. If you combine lead and zinc, that's the biggest supply of silver. If you take it by individual metal, it's actually copper. These big giant copper porphyries are the biggest supply of silver in the world. And the thing about that is, like, you know, The silver is so unimportant to them that they're happy to do a silver stream deal because the money's in the copper. And so this can be a good or a bad thing in that if you have a bunch of copper production, copper prices are high, you might worry, oh, that's bad for silver because that's going to flood the market with silver. Even if the silver price goes down, the copper miners are still going to mine it, right?
Yeah.
So why am I bullish on that case? Because the copper pipeline is almost dry. You even if all you care about is gold and silver, or even just silver, you should pay attention to the other markets. And if most of your silver comes from copper mines, it matters what's happening with copper mines. And I mean, if the United States takes 30 years to permit one copper mine, and you know, I mean, there's like one other that might be shovel ready. It's just like the pipeline for big enough to matter copper mines that have silver byproduct coming online. It is so dry. It's like a trickle.
Yeah.
And we're now redefining what's economic because of this. We're thinking, oh, well, maybe 0.3 is the new 0.5% copper I'm talking, because there's just not enough copper at the old grades that we used to mine. So what I'm saying here is that we're looking at a structural deficit of supply on the copper side for years, if not decades to come. And yeah, we'll permit these and build these as fast as we can, but that takes years or even a decade. These giant, multi-billion-dollar mines, you don't just build them overnight. So as the industrial side booms, if the supply comes from the biggest source of supply comes from these mines, of which there are so few and far between, and it takes many, many years to permit and build, I think that actually paints a very bullish case for supply constraint on silver that I think is highly material.
Well said. And I think that doesn't get pointed out enough. And I'm glad you brought up copper. That was actually my next question because it seems like there are very similar dynamics. And I guess you answered the copper question in there as well of how we're facing. We didn't even get into the green targets today, but it seems like I don't know if that's, the equivalent of that report, that book report you write in first grade where it's like, well, you tried, the numbers are off, but we'll give them an A. I mean, I don't know if they actually, I'll ask you, the targets that they're putting out there, is that in any scenario, best optimal conditions? Is there any chance that these can actually be met from a mining perspective?
No, but but that aside, let's say the world completely gives up on. Sorry, I wanted to be concise,
Love
but
it.
let's say the world gives up on the data centers. Like we're just gonna okay, never mind. AI is too dangerous. We're gonna just walk away from it. Of course, that's not going to happen. It's an arms race. There's zero chance. But let's say that happens, and let's say people are pissed off and they don't like EVs. We're all Canadians now, and our EVs don't start in the winter, so we're not going to buy any more electric cars. The whole world does it, which isn't going to happen. There's zero chance of that. But let's say both of these things happen. You still need more copper, and the pipeline is dry, right? I mean, just population growth, demographics. It's we're going to need Dr. Copper no matter what. So the way I look at it is all these mandates and goals and things like that, they may add tailwinds, but even if they don't, the case is very bullish because this is a supply constraint argument. It's not a demand driven argument. It's a supply constraint argument. And so policy doesn't change that. And in even the most pro mining policy you can imagine, and we're seeing real evidence of this in the United States right now, like not just talk, but actual permits and expedited permits and grants and loans. And I'm not into subsidies. I'm a free marketeer, but that tells you something about how serious the United States administration is about encouraging mining. And the NIMBY thinking has been kicked out of this backyard for now over
Yeah.
an investable period of time, right? Even if the next president reverses everything, Trump still got 3.5 years. That is within my time frame for investment. Anyway, what I'm saying, Chris, is that I don't know how the global geopolitics is going to work out and how these trends. Nobody really knows. We have fancy guesses to make, but what we're arguing about, what may or may not happen, is how strong a tailwind will there be? There is no case in which the world's like, oh, you know what, we don't need any more copper, or we're going to need 15% less copper next year than we did. That doesn't happen. That's not a scenario. Okay, so okay, maybe if there's a Mad Max scenario, we go back to the Stone Age. Okay, we don't need any metals. At that point, though, I'm not worried about my share prices.
long as we don't go back to the Stone Age, we're going to have an issue. I like it. So, last one for you before we wrap up here. Just had to get your comment on uranium. You were talking about this back in the days when the Rick Rule Symposium was the Sprott show, and we were up in Vancouver. And Rick was saying how either prices going up or we're going to stop using electricity. And I would commend you as well because you've been writing about this well in advance. But anything that you'd like to share about what happened, and also, I guess the core question for people who are saying, all right, well, now that the price has gone up to whatever degree you want to give you don't need to give a licensed financial recommendation, but just anything you could touch on there.
Sure. Short and sweet version is I still see huge opportunity here. I think this is another one where there is both a supply constraint issue like in copper and a huge demand increase. I think copper demand is increasing anyway, but that's nothing compared to what's going on with uranium. I mean, the Chinese just announced that they want to double their nuclear reactor fleet by 2040, which in terms of nuclear build out is like tomorrow. This is huge. They're going to if and it's not just that, breaks. I mean, even in Europe, even the Germans have said, well, maybe it was a mistake to pull the plug on our last nuclear reactors. Even in the United States, not only have we just permitted the first reactivation of a mothballed nuclear power plant that just happened. I mean, we're talking 3 Mile Island. Like, what greater symbol could you possibly have of a turnabout in thinking than for people to not just stop bad mouthing, but to actually talk about putting 3 Mile Island, that other reactor back online? Like, wow. To me, this is super, super solid. It would take a Chernobyl scale event to derail this. And okay, uranium last year goes at the beginning of last year goes screaming up over triple digits. That was too far, too fast. It was that spot price was way ahead of the long-term contract price. So no surprise it corrected. And no surprise, markets being the way they are, it overcorrected. And then that chart you just showed, it carved out a bottom, came back. Um, both turns, by the way, I'm not a real good market timer. I just try to shop for value, but both of those I called pretty accurately in this space. So what I'm saying now is we've still got a huge amount of upside, but this is so obvious that a lot of the better stocks are trading near 52-week or even all-time highs, despite the latest wiggle downwards in that chart you showed. So the takeaway from this, super, super bullish. I wouldn't chase anything near all-time highs. It's a highly volatile market. The spot price is correcting now. So there's a good chance. So we might see a better buying opportunity. If I didn't have any uranium at all, Chris, and I wanted some in my portfolio, I didn't have anything, I might buy an ETF representing the metal itself because I see relatively little downside in that. But if I do have some uranium and I just want more, which is the position I'm in, then I think probably wait for volatility to be our friend. I do have a shopping list. I am watching certain names. And, should I be so fortunate as to have another scare in this space, who knows? Maybe the Russians, shell Zaporizhia again or some other non-event that typically scares the market for a week. I would be happy to take that. I would see that as a gift.
Well, I sure appreciate that. And I know there's a lot of people in our audience that are also following the uranium market. So I think that's quite helpful. And perhaps just wrapping up, if you, well, I could say, if you could let folks know where they can find you. We've seen that in the background there. Although I'll comment on your sign says discipline, diligence, and results. And again, I think you just enunciated it now and also in your column. I love how you say, well, I can like this, but maybe not at this level or waiting for a pullback. And I think certainly people who are advanced investors find that quite valuable. So anything you could share about the great research you're doing and how people can best stay up to date or get access to that.
Sure. Well, I always say that there's a free weekly digest we put out. It's a great place to start. You can see how I think and whether it works for you. And you may not agree with me. You may call me Darth Uranium or whatever if I'm not bullish enough for you. But I can promise that you will not be spammed with a flood of daily advertisements. I hate that. You get notified for what you signed up for, and that's it. And from there, if you like my work, you can see whether my paid services might work for you as your due diligence guy.
Well, I sure appreciate that you were doing this. You have quite a background. Gee, I remember reading you back even in my Wall Street days. So that's already 15 years ago. And Just appreciate you making some time. I'm sorry I missed you at the symposium, but great to catch up with you here today. And I'm sure people at home enjoyed that. And we'll have to do this again soon, my friend.
Next time. Thanks a bunch, Chris.
Well, thank you, Senor Tigre, and thank you at home for watching. Sure hope you enjoyed that, and hopefully it helped a little bit in a period where gold and silver prices are down, although in terms of other things that might help, maybe this will make you smile a little bit, because if you weren't happy yesterday, on the other hand, at least you're probably doing better than Trump. Interesting, of course, that he did that tour of the Fed with Jerome Powell last Thursday. I'm guessing at some point, and man, that would have been fun to hear the audio that was not picked up by the mic as they were talking. Wonder if he called him a numbskull in person. Guessing he pressured him to lower interest rates. Obviously, that did not happen yesterday. And although, great bullet here by CNBC, Powell said the FOMC hadn't made a decision yet about what they would do at the September meeting. Well, I guess since we're still in July, that would seem good. And maybe one other thing to make you chuckle. Every time I see Steve Leisman, I picture Dave Kranzler describing how he would giggle watching Steve and the sweat dripping down his forehead. So hopefully Steve is okay and everyone else is okay. And there is one other thing I wanted to mention before we wrap up, because we did have a member of our Arcadia community and audience and family, I will say, who was unfortunately affected in the recent floods that went through Texas. He had mentioned something in the comments about that, and his name is Tom. And as you can see there, his RV did not do so well in the floods. And I was asking if there was anything I could do to help or any way that we could help. And he mentioned that actually his daughter just last week set up a GoFundMe. So in case you are able and would like to help a good man in the Arcadia family here, I just wanted to pass this along because I spoke with Tom. Really nice guy, and you know, they've had a lot of damage. Insurance has helped with some, but not anywhere near the amount. So just thought this was a time that I would reach out to our audience and see, again, I know everyone's situation is different, but if you're inspired and able to help Tom out in any way, whether that's a donation or just sending some prayers or keeping some kind energy in mind for Tom, and of course all of the other people that have been affected there. Actually, I'll also mention that our BRICS de-dollarization expert, Matt Riley, who you've seen a couple of times, he actually went over there to volunteer about a week ago. So thank you to Matt for taking some time. I believe he took one of his sons with him. And anyway, of course, unfortunate to see what happened there, but the link to this, if you'd like to help Tom out, is in the description field below. And as always, I just thank you all for being a part of this, and hope you enjoyed today's show. And Tom, sending great wishes that things are coming along out there, and hopefully this will help a little bit. So with that said, we'll wrap up for today, although especially with the big move in copper that happened yesterday, in case you missed it this morning. Vince talked plenty about that, and that one is coming your way now.